In this Grab stock analysis video, I'll be sharing with you my fundamental analysis of Grab as a company, a Singaporean perspective of using Grab app, and my technical analysis of Grab stock. So if you're wondering should you buy Southeast Asia's largest startup, make sure you watch this video. Before we begin, if you're new to this channel, my name is Linus, and in this channel I share all things related to the stock market, so both investing and trading. So if you want more videos such as this, make sure you subscribe to my channel because each week I release new videos about investing, trading and the stock market. Alright, let's first take a look at the news and what is the hype surrounding Grab stock. So we take a look at this article by CNBC. We see over here that Southeast Asia's ride-hailing giant Grab is going public via a record-setting SPAC merger with Altimeter Growth Corp valued at nearly $40 billion. And at nearly $40 billion, this would make Grab one of the world's largest SPAC merger ever. So that's a very rich valuation for a ride-hailing company. But Grab is not just a ride-hailing company. So if we take a look at Grab over here, what Grab currently does is transportation, so it goes beyond just ride-hailing, food delivery and digital payment services. So in fact, what Grab wants to do is to become a super app. The term super app is more common here in Southeast Asia and in Asia in general. But for all you guys who are watching this video and who is not in Asia, the super app is basically this thing. So think of a super app as having Facebook, Instagram and Twitter all in one app. And not only just these social media companies, you also want to add transportation and food delivery apps such as Uber and Lyft. On top of that, it also includes e-commerce functions such as having like a Amazon or an Etsy inside the app. Another function of the app will include digital payment services, think of PayPal and Venmo. So if you combine all of these different apps into one app, you will get a super app. And that is what Grab wants to be. An example of a super app right now is WeChat by Tencent. And this app is used mainly in China, where most if not all of the Chinese people use it in their everyday lives. And that is where Grab aims to be. So that's a quick overview of what Grab as a company does. Now let's take a look at some of the fundamentals of Grab. So if we see over here, this is Yahoo Finance and this is Grab Holdings Limited. So we take a look at Grab's total revenue throughout the years. So in 2019, Grab wasn't making any revenue. In fact, its revenue was negative. So negative 845,000. And then in 2020, it increased from negative 845,000 to 469,000. And in the trailing 12 months, it also increased to 787,000. So revenue for Grab has been steadily increasing over the past 3 years. Now let's take a look at net income. So net income was negative 3.9 million. So take note that these numbers are all in terms of thousands. So in 2019, Grab was making a loss of $3.9 billion. And in 2020, it made a loss of $2.745 billion. And in the trailing 12 months, it made a loss of negative $2.723 billion. So even though Grab hasn't made a profit just yet, we see that Grab as a company has been slowly and steadily reducing its net loss. So that's total revenue and net income, or in this case, net loss for Grab. Now let's take a look at Grab's latest quarterly results. So we go over here. Grab reported its third quarter 2021 results back in September 30th. If we take a look at some of Grab's financial and operating highlights for Q3 of 2021, we see that GMV or gross merchandise value grew by 32% year over year to reach 4 billion, a new record for Grab, and deliveries GMV grew 63% year over year to reach 2.3 billion, which offset a 30% year over year decline in mobility GMV due to lockdowns and movement restrictions. So deliveries GMV such as food delivery grew by 63% year over year, but mobility GMV such as transportation declined by 30% year over year. Gross billings grew 41% year over year to 616 million, which is a new all-time high. Revenue was 157 million, down 9% year over year as a result of the expected decline in mobility due to severe lockdowns in Vietnam. So third quarter revenue was down 9% year over year. And for adjusted EBITDA, or earnings before interest, tax, depreciation and amortization, of negative 212 million was down by 85 million year over year and up by 2 million quarter over quarter. Loss for the period grew by 366 million to negative $988 million. So the year-over-year increase in losses during the third quarter was driven primarily by non-cash expenses. So these non-cash expenses primarily consist of interest accrued on Grab's convertible redeemable preference shares, stock-based compensation and fair value changes on investments. And they also mentioned that a significant portion of such non-cash expenses is expected to cease after the business combination. So what Grab is telling us is that the losses during this period is very likely to be a one-off event. And we won't see such a huge amount of non-cash expenses moving forward. And then for monthly transacting users or MTUs, it declined by 8% year over year. So MTUs indicate the users who are transacting on the platform for that month. So MTUs declined by 8% year over year. And we see for average spend per user defined as GME per MTU, it increased by 43% year over year. And this is definitely something positive because this means that Grab is making more money from each of its users. So that's a quick look at Grab's fundamentals. Now I'll be sharing with you my perspective as a Singaporean on the Grab app. So disclaimer, this is just one Singaporean's perspective, so it's just my own perspective of Grab, and it does not represent an overall Singapore view of Grab app. So for me, I'm not sucked into using Grab app exclusively. I do use Grab, but I also use other apps. And yes, Grab app do offer more services and it might be a bit more convenient than the other apps. But at the end of the day, which app I choose to use is still dependent on price. And that is why I feel that many of Grab's current services are price sensitive. Let me give you an example. For transportation, I do not just use Grab app. I also use Gojek and Ride. And which app I choose to use my ride hailing is still dependent on price. So I'll go with the app that offers the cheapest price at the time. And even for food delivery, it's the same for me. Yes, Grab might have some F&B options that other apps doesn't have. But unless I'm having a craving at that time, I might just look to order other things. And again, if all the food delivery apps offer the same food, I'll be choosing the one that offers the lowest fees. And this is my Singaporean perspective of many of Grab's current services. And because many of Grab's current services are price sensitive, I do not believe that they have pricing power and competitive advantage over their competitors, at least for now. Now I'll share with you my technical analysis of Grab stock. So if you take a look over here, this is Grab stock over here. From its peak over here to the low over here, Grab declined by about 65%. So that's a huge decline in just a short period of time. And right now, if you take a look, Grab stock is below the 50-day moving average and the 200-day moving average. So for me personally, if I were to invest in Grab stock, I wouldn't invest in Grab stock just yet because it's below both the 50-day moving average and the 200-day moving average. So I want to wait for prices to be above both the 50-day moving average and the 200-day moving average. Or at the very earliest, I want to see Grab stock making higher lows and higher highs first. So this low over here must be higher than this low, and then this high over here must be higher than this high. So that's the very earliest that I would invest in Grab stock. And over at this candlestick over here, you can see that prices are finding quite a bit of support at this area because of its long wick over here. So that means that prices went all the way down to this level before buyers start to step in and push prices up all the way to close at this price level over here. So if we zoom out over here, we see that at this price level of around $5.95 or around $6, this is a strong support for Grab stock. So if prices were to decline over here, the first support that I'll be taking a look at is this price level of around $5.95 to $6. And that's my analysis of Grab stock. Hopefully you have enjoyed and learned something from this video. If you did, smash the like button because it really helped the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and tips, make sure you join my Facebook and Telegram groups. I included the links down in the description below. I'll see you in the other videos to your financial success.